Hello, everybody, and welcome to another daily plan. I'm your boss, Joe Boss. Trying to see if I can set up a little something here, but I don't think I'm going to in time. Sorry, Aristotle over there on WAP. Not going to be able to set this up in time for you. Okay, let me just get all the screens set up on my end, and let's get the music back on. Ah, man. So far, it's been a pretty good morning. Hello, Ari. And we got the other Ari also in the WAP live stream. We got two Aris in the chat. One on WAP and one here in YouTube. It took me a while to get the Twitch and Kick streams set up today for some reason, and wanted to do a slightly different bit rate. Okay. And we can make that just a tad louder. Okay. So let's get into today, shall we? I do have a trade I need to throw on this chart here that I took a little earlier. Let's see. Trades, and it's a short here, and let's go ahead and slap on the correct price. 101.09078. Okay, and zoom in so then it's easier for you guys to see. Yeah, this trading view seems like it's lagging just a tad. I do have some other trading view windows open at the moment. Trading view windows that I'm doing some programming in. I honestly should have thought about closing those before starting the stream, so then the chart is a little less laggy. But you know what? We'll make do. We'll make do. And man, I gotta say, I am kind of surprised with this jump up today from the OECD data, setting all these somewhat worse growth expectations for many countries around the world, you know, including the United States. But then to see that the OECD set bad growth expectations for Europe, and the euro is still jumping higher. So as soon as I saw that information, I was like, okay, I'm gonna take another shot here. And when it comes down to the actual day trade of stuff, let me make sure I have my epic pen ready. Let's go ahead and load that in. Okay, here we go. We got our little epic pen boy. Okay, and let's make that a little smaller. Yeah, there we go. So we got our peak in our distribution for the trading day, and this short is just right there. Bum ba bum. Again, I'm enjoying my time using these drawing tools. So let's see, an appropriate stop for the day would be somewhere around there. Let's go ahead and slap on the timing dots. Whoa, all right, those are some big percent bounds. Yeah, so let's do like 1.5 and set the bar bounds to like 2. Yep, a lot of tops for the day coming right here, and it does make sense to put the stop maybe close to there. Yeah, as you can see, there are some highs that come in over on the next bar, but a lot of the tops for the day on this bar, given this current high, come in right around here. That is also given this low. It's a pretty wide low here, so it's scrunch that in a little bit. That looks a little bit more appropriate. Yeah, and you can see most of the tops for the day, most of the top dots for the day come in right around here. Okay. So I feel pretty good about putting a stop here, because otherwise then you're going up here or up here, I believe, into kind of this zone once you're past this stop. And that makes sense to me. Let's go ahead, check out the watch list. Aussie and New Zealand are doing pretty good right now. I wouldn't be surprised if we moved up to here by the end of the day. The good news on the Aussie side, and I'm about to flashbang you guys a little bit here, but if we scroll down far enough, I'm pretty sure, yeah, we got a little bit of analysis. Where did we already pass it? There we go. Australian dollar firms up on weaker greenback. The Australian dollar climbed to around 6.33 on Monday, reaching a one-week high as the US dollar weakened amid escalating trade tensions and mounting economic concerns in the US. Australian Prime Minister Albanese reaffirmed last week that Australia imposes no tariffs on US goods under its free trade agreement. He also emphasized that Australia would continue seeking an exemption from US tariffs, warning that retaliatory measures would increase consumer costs and drive inflation higher. Speaking of which, have you guys seen what Trump did with the Houthis? He's going after the Houthis and trying to re-secure the trade route that goes into the Mediterranean, which net should actually reduce inflation in the Eurozone and in China more than anything. So it should allow those countries to stay rather stimulatory going forward, and in that respect, with whatever goods that they send to the US that gets tariffed, they're going to have an easier time handling those tariffs with inflation under control. I think, yeah, I don't have that news article here, but I do have the one where Trump is going to speak to Putin on Tuesday to push for a Ukrainian ceasefire. That could be a boon for the Euro side of things, if that goes well and good. But then again, if there is a ceasefire, it's like, well, what's the piece of all this stimulus? What's the purpose of all this military stimulus if we're getting a ceasefire and the US is the one maintaining the ceasefire? I mean, hopefully we'll see some kind of, you could say, on-ramp for Germany and France to get more involved militarily in their own defense. But there's too many people in Europe that are in power that just want to go to war with Russia. So I'm not totally sure if rebuilding their military is the smartest idea for a lasting peace, honestly. Oh my god, I thought I deleted these guys. Jesus. You know, I gotta maybe just stop streaming on Kick, because these, like, default bot things are terrible. Let's see here. Do do. Let's see your channel. Do. Settings. Studio. Man. Alright, banned words. You need more followers. I have like 12 things. Add me on Discord. Discord. You need more followers. I have like a bunch of different spam messages already set up for the banned words. And man, they just keep on coming. You would think that after someone gets banned in one chat for spamming, that these guys would, you know, get removed from the platform, right? But nope. Nope. Sadly, that's not the case. Alright, a nice chill stream today. Nice chill stream. So, again, if you guys need chart requests, go ahead and send that over. Also, New Zealand is doing pretty damn good right now. They also, right, if we do New Zealand, there we go. Oh, wow. Really? Their equity index went to a low here? Oh, it bounced off of the low. Okay, it's actually done pretty okay compared to yesterday. I mean, don't get me wrong, that's still a pretty bad day, right? Actually, it's the worst performing equity index so far, right? Of all these percentage changes, it's the worst performing one. Yikes. And I don't think we need this big fat orange or yellow line. I think I saw something. Are we at a monthly peak? Yeah. So instead of getting this down move, as I wanted to see going into the week ahead, we are just going right to this peak here. So we're probably going to get an up and then a down move, which does kind of change the expectation here a bit, because now this closing expectation has to change. When you go up and then down, you're probably going to end up with a red week. This down and then up scenario, right, leads you to have a slightly higher closing price versus an up and then down, right, gives you a slightly better closing price for bears. So we are going to have to change this expectation and more or less this expectation. We are probably going to still hit this expectation of just way sooner. So of these three expectations, I'd say all three of these are wrong. But the only thing that was right was expecting to reach this price. We just did it way sooner. So with that in mind, let's go ahead and start looking at spots on the downside here. And let's make this pretty fat. Okay, so I see one very clear cluster right there. You can see kind of highlighted there and there, some overlapping dots. So I'd be on the more cautious side. And of course, once the top actually comes in, we'll have a clear idea of, rounding down this filter here. and getting less dots, right? So probably, I wouldn't be surprised if this thing ends up reversing more significantly later in the week. But again, you can always go a bit higher. You can always go a bit higher, especially if the tariff deal stuff gets properly handled. Are you kidding me? Is that another scammer? Oh my god. That is actually insane, Kick. Alright. Chat and go to banned words. You're not yet affiliated and verified. Let's go ahead and add that now to the banned words thing. Jesus. Well, at least I'm keeping an eye on the chat and keeping it moderated. But yeah, I think I've had the most scam messages sent to me initially through YouTube. YouTube is a lot better now. But now it's just all Kick, pretty much. But you know what? Over time, you set up a good filter and all of the messages won't come through. It'll be a nice experience. So yeah, if you guys are watching, go ahead and let me know if there's humans watching. Anyways, we'll go ahead and keep doing some analysis here. Yeah, I still see most of the lows kind of around here. There's a higher variability if we get, a crash going into Wednesday here. But if our top for the week comes in somewhere around here on New Zealand dollar, I'd probably expect a pretty volatile move if we get a lower low this week, which seems pretty likely. I mean, there's also this area, right? There's a nice little cluster there, but it's mostly these guys here, so it would kind of look like that, most likely, in my opinion, right? When we get closer to this peak, and I'll go ahead and set up an alert. Yeah, so call it 57.95. Once we get closer to this peak, I'll get an alert. Effectively the 58 handle. Wouldn't be surprised if we tested out that 58 handle. But the New Zealand dollar is moving pretty good here. Let's actually check out the daily yield spreads here. How are the yield spreads holding up? They're pretty neutral, but that doesn't mean necessarily to get short. They are less bullish, but they're still green. And then on the New Zealand side of things, they should be like definitively green, right? Yeah, like they're all in the proper order. They're all bullish. So I'd say looking at this, there is a risk of popping even higher. So I would definitely wait myself on taking any shorts at, in the 58s until we get some, you could say, more verifiable news on the direction. So this could easily just continue going higher. On the dollar CAD side, I did take a trade at the beginning of the day on the long side. And so far that's been in a drawdown, but I think it's pretty much over. You can kind of see in real time why I would think that. Yep, we have our peak for the day, and there's our low, right? This is a peak of where the distribution of lows end up for the day, and this little spot right here is where our low currently is. I could, yeah, we can go ahead and do something like this. Yeah, there's our low, here's our peak. We're lining up right about there. All's good. And we hit our expectation, more or less, about a day early, right? Trying to hit this price, and we hit it a day early. So all's well there on that front. So I'm still holding on to some of these long trades. Don't get me wrong, it sucks that some of these trades are in drawdown, right? But honestly, I'm still in favor of being long dollar CAD. I think I posted something in my trade thread about this, effectively saying, oh, if the Trump Carney call that it's supposed to be happening soon, .tm, I'm not sure when it's going to happen, but it came out down the wire, the Financial Juice Newswire, that we're going to be getting that shortly. But there's no like set date or anything for it. All right, and in 5 minutes, we should be getting, yep, Canadian foreign security purchases, Empire retail sales. Yeah, so in 4 minutes, we're getting some data. Very, very, very good. So we'll see some movement. If retail sales is going smoothly still, then we can expect that the estimates for lower US GDP growth are underestimating the amount of growth to expect, which should give us a more bullish view on the US dollar, because one of the main reasons why we're seeing a weaker dollar here in a lot of cases is due to weaker US GDP expectations. And at least compared to Canada and tariffs and this whole scenario, I'd rather stay on the bullish side on the dollar CAD. And let's actually check the yield spreads real quick. And yeah, the yield spreads are definitely flipping positive here. Over the last week, over the last 2 days especially, which is what these first two spreads are saying. How have the yield spreads been moving over the last 2 days? How have the yield spreads been moving over the last 7 days? How have the yield spreads been moving over the last 25 days? And then these are just the sums over all these different durations. And then you have the visualization over the different durations here as well, over the different, you could say, spreads for all the different bonds. Yeah. And so far, so good. The only thing that's super negative is the long term, which means intermediate and short term are improving. So I would expect there this week to be the turnaround. So long this picture continues as expected, where this long-term spread continues to weaken and turn more positive, and then these two spreads here continue to stay positive. So I would be on the more cautious side, but it seems like we'll be hitting our expectation that we set in the week ahead trade plan stream last Friday. Real quick, let me reload this guy here. Yeah. Seems like we'll be hitting that expectation. All right, we're getting NFP here in about a minute and a half. I'm going to turn on Financial Juice, so if you hear another voice, that is our friends over at Financial Juice speaking. So we got about a minute left here until NFP comes out. So if you got positions on, make sure you pay attention to your positions.
1 minute ago now, I'll be leaning with the US retail sales month on month.
Where's my water?
Ten seconds. Zero spot 2%, 0.2% lower than forecast of 0.6%. Core retail sales month on month, 0.3%, 0.3% as expected. New York Fed manufacturing -20, lower than forecast of -1.9. Just waiting on the retail sales year on year. Did see a whipsaw on the S&P 500 and also the dollar index off the back of that data there for US retail sales.
US data is getting stronger off this. Huh. I would have expected this to confirm the lower growth expectations.
Seeing the prior revision for the month-on-month retail sales at -1.2% from the original prior of -0.9%. Core retail sales prior revised to -0.6% from the original prior of -0.4%.
So the prior was super negative and it got revised to a more neutral number, is what I'm hearing. Maybe you guys can tell me if I'm right.
US stock index features holding losses after economic data, and there was just a bit of a whipsaw.
Yeah, maybe we can get the report.
Retail
here.
sales year on year 3.11%, 3.11%.
Yeah, so the previous was -0.9%, and apparently that got revised to like -0.1. And then this retail sales came out at 0.2%. So I think net, if you include the revision, yeah, let's go ahead and check out the report now. If you include the revision, it should update GDP forecasts to be more optimistic.
We have also posted out the US retail sales report for February on the Financial News feed for you to read through.
Yeah, if only the thing would load. Yeah, the report just isn't loading. I'm trying to bring it up here on stream for you guys, but I'm not seeing it.
Treasuries pair gains after retail sales and New York Fed manufacturing.
Bum, 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 bum. And net, it seems like this is going to be okay for the dollar. A bit a-okay. Let's head over to... Okay, did we actually load this thing now? Yeah, thank God. Alright, copy. Let's go over here. Paste and go. Alright. So where is that revision? I don't know, maybe someone has easier access to it. I am just trying to get information on that revision. Yeah, this would be way easier with Bloomberg Terminal. That's for sure. Just be able
Euro
to look
up
at it.
0.11%, sterling up 0.22%, dollar marginally up by 0.01%.
Bum bum. Or an icon, or what is it, Refinitiv Terminal, right?
Emerging market FX hits a session high on US retail sales data.
Let's see here. Okay, we do have a new print here if I refresh this. Retail sales. Oh. Yep, there we go. Retail sales.
Also saw the prior revision for retail sales year on year just coming through here of 3.91%.
Okay. I'll go ahead and mute him for now. I was actually kind of taken aback by this. Housing starts drop in Canada. Okay. Fell 4%. Yikes. That's not good. That's inflationary for the housing market later on in the year. So not good news for Canada there. Also, let's move this guy over a bit. We can move Discord over here. All right. Retail sales. Yeah, don't need that. Yeah, they don't talk about the revision here. Yeah, this is negative. Oh, so did it get revised from negative 1.2% to negative 0.9? Is that what the revision was? Seems like it. Yeah, you can see the actual number got revised here, and it's different than the previous here. Yeah. So that seems to be the case. Seems to be the case. And the yield spreads short term on this 2 hour are getting a lot more negative. Let's go to a daily and check out the yield spreads here. Yeah, those are pretty negative short term yield spreads, and even intermediate term over the last week. So the only thing really keeping the yield spreads positive right now is the fact that we've had this humongous positive move over the last month. So I'd keep an eye on how these two spreads are moving at the moment. Again, I've had a bearish expectation, so I am biased, right? And you can see my expectations, right, for lower prices, right? We got these shorts from up here talking about the debt break not going through, inflation coming in lower. Yeah, and also that's probably the top for the week. That was a really good hit on the short side, if that's actually the top for the week. If that's actually the top for the week, let's check out the timing dots and reduce that size a tad here. Yeah, that looks good. That looks good. All right. So if this is the top for the week on euro dollar, where does the bottom usually come in? Ooh, wow, there's a lot of dots pretty far down here. So we got a clump right here, and we got another clump right there. So either this spot right there, which kind of leads to this spot here, or kind of this spot here in the tail, where you see these areas right here. So kind of the fatter part here of the distribution. So it kind of depends on where we are in time to figure out where we're going. in my opinion, we have to move pretty far down pretty quickly in the middle of the week to see these lower prices down here, right? And to see something like this, we can just kind of meander like so. So this is a more serious drop in the middle of the week around Wednesday. And we find the low closer towards the end of the week. So I'd say if we're hitting these prices, right, somewhere in the next 48 hours over here, then I'd expect us to move lower down into this spot. And hopefully that makes sense. Do I trade the S&P 500? I trade and do analysis on everything. For the S&P, this seems to be all good. And if that's the low for the week, let's go ahead and do some analysis here. If that is the low for the week on the S&P, where does the top come in? The good part about these indicators is you can use them on any asset. Oh yeah, that's looking pretty bullish. A lot of tops for the week come in around here. So that's 57.60. Again, none of this is financial advice. We're looking at probabilistic tools. So if you don't understand how probabilities work, you won't understand how to interpret these indicators. Thankfully, this is stuff you can learn very, very, very easily. It's not hard to learn. Like, you just to say, pretty much everybody understands how basic statistics and odds work, right? Everybody understands like every 1 out of 6 times or 50% of the time, right? People understand probabilities quite naturally. It's just a matter of like, okay, here's a tool and here's how you actually interpret the tool statistically, right? And that's what the trading group is for, right? You get access to the trading group and all of these indicators that are here on the stream, the yield spreads, stuff that I haven't even gone over, range probabilities, all this good stuff. And the actual trading group where we are sharing our trade logs. Again, it's not a signals group. This is a spot where you're supposed to join in once you've been hanging out in the server for a while, doing research in the Outlooks channel, doing research in the trades forum, and you have a general understanding of where our focus on geopolitical and outlooks research comes from. And then once you're comfortable with, okay, I like the focus of this group here. And while I might focus more on the FX side of things, there are guys in the group who do tons of equity stuff, right? There are guys in the group, again, because we receive and find so much of this free research. That's why I say I can pretty much tell you something about every asset class, because there's commodities and equities and currencies and bonds, right? And also crypto. We have the crypto chat over here. There's a ton of research that gets done in this Discord. And the trading group is more or less for guys who want to learn how to do this type of research a bit more effectively, with some help maybe from myself, and to have help with these indicators in trying to set their own expectations. Oh, well, thank you for joining, Dakar. Make sure you go ahead and try out. By the way, there is a trial for this. So if you want to just check it out, you can do the trial for 10 days. And hang out, try out the indicators, see if you like it, and then decide to pay. But it's a really good value based on, I've been in a lot of other trading groups personally myself. I've paid hundreds of dollars for trading groups, and indicators. And for what I know is out there, because I look at what everyone else is providing, I provide a whole lot for this $100. I provide a whole heck of a lot compared to other trading groups for $100. Yeah. So I'm pretty happy with that price. Gold? Oh yeah, dude, gold is something we cover constantly. Oh yeah, I should have also brought in, commodities, right? So this is just the commodities watch list. And I mean, if you aren't following oil and gold, I mean, I have more bearish gold expectations, frankly. You can see as soon as I set a bearish gold expectation, the thing went and popped higher. But this is based on improving growth and inflation expectations. So over time, right? It might not happen immediately, but I'm thinking inflation's going to get under control and we're going to see global growth increase again and US growth increase again. And then I just think that the periods of time when we see these insane rallies here in gold are kind of over now as we go into a more growth focused cycle. Because this is fantastic, but this is when essentially we're trying to manage inflation, right? Like most of this growth is going into 2019. I remember going into 2020, everyone was pretty much expecting, like I remember this. Here in 2019, right here, everyone was starting to set expectations of, hey, there's problems in the global economy and we're expecting a slowdown in 2020. And then we have we have COVID occur, and then we have all this massive amounts of money spending, and don't tell me that's March 23rd. Is it? Yep, that's March 23rd. It's not the exact low, but it's the day that we get that big rise up, right? March 23rd, the infamous day that the Fed sends out an email telling you to buy everything effectively because they're turning the money printer on and making it go brr. And ever since that money printer was put on, being long gold was the solution. But now the money printer, with inflation, the reason why gold's been rising with the Fed and all these central banks keeping rates high was because inflation was also insanely high. But now inflation is being brought under control, and I have a more positive growth expectation than a lot of these forecasters do. Don't get me wrong, I'm not the only one in that camp. There are a lot of other very smart analysts who are thinking, growth might not be fantastic, but I still think that growth is going to do better than currently expected. And that positive expectation, when you see growth turning out better than expected, that is, frankly, more so, in my opinion, worth trading. Because if you listen to me frequently, I say trading is getting exposure to the change in expectations. So if you expect expectations, if you think expectations are going to change, then you should be getting exposure anticipating that change. At least that's how some of the greatest traders have thought, right? All these guys who expected recessions to occur or expected bull markets to occur and got exposure to them and turned out to be right when everyone was thinking the opposite, thinking a bull market was going to occur, but a recession actually happens. Or bear market was going to continue, but a bull market actually emerges. You can boil that down to simply being a quote-unquote contrarian. but I don't like being a contrarian for contrarian's sake. I like being a contrarian, like with this growth expectation, higher growth expectation, when I see, oh, the tariffs probably aren't going to be so bad, at least for the entire world. And the amount of inflation is going to be mitigated by other measures that people currently aren't taking to effect. Like, for example, Trump getting the Houthis out of Yemen and stopping them from attacking the shipping lanes that are going into the Mediterranean from China to Europe and Europe to China. That's going to reduce inflation in both those countries and make it easier for them to obtain higher growth, global growth themselves, but also for them to mitigate a decent amount of the marginal negative effects from US tariffs. So there's a lot of moving parts to keep eyes on, and I'm becoming more optimistic as time goes on. So with that optimism, I'd rather be in assets that are more likely to see that growth rather than gold. I don't think gold is going to be terribly fantastic. Actually, that's an environment where I would expect Bitcoin to do pretty well, personally. I think this is going to be a very good year for Bitcoin. I think it'll be better for Bitcoin than gold. I mean, I think for most years, Bitcoin has always done better than gold. Again, I'm on like the cusp of millennial and Gen Z. So, I have a particular affinity for crypto over gold. However, when I was younger, I got exposed to a lot of, Ron Paul Goldbug sort of stuff. So when I came across Bitcoin, I was like, oh my God, I'm really in love with this stuff, right? This, because at that point I was very familiar with Austrian and Keynesian economics, even at that age. And when I saw Bitcoin and saw how it laid out the supply, how it uses encryption to ensure that supply isn't manipulated, and yeah, man, it was just great. I really, really enjoyed it. Anyways, more positive growth expectations means more discretionary income, and, well, you're going to see a lot of investment into, altcoins, to say the least, in that kind of environment. So let's see, XRP, Sol. Wow, Sol is quite a ways down. ADA, so XRP and ADA are doing a-okay. How's ETH? Yeah, ETH is not doing so hot. So it's mostly Sol. Sol, ETH aren't doing good. XRP, ADA is doing all right. And Bitcoin is doing, it's holding in there. The slowdown is stopping, right? It's sped up here on the downside, and now it's slowing a bit. Again, I don't expect this thing to fall to like the 60s. Some people are saying, oh man, it's gonna fall so far down. I think towards the end of March we're gonna see the actual pop come in. I had more bullish expectations for Bitcoin. You can see here I expected the down move, and then I expected a rise and a close up to here, but we didn't get that. It wasn't bullish enough. All right, expectations not met. And it's okay, frankly, to have expectations not being met. And it's also probably nice and something you can appreciate by actually not having to go back and watch my entire back catalog of streams to know what was I expecting at different points in time. So I'm not, saying something different without admitting that I'm wrong, or confirming, hey, this is what I did in the prior stream. Look how right I was, You can say this was a correct expectation, and then these two, I would consider these incorrect. because I consider expectations something you set in price and in time. So your expectation could be met early, right? Like in this USD CAD scenario. Oh wow, USD CAD is continuing to fall. Wow. Certainly wasn't expecting that, especially on more positive short-term yield spreads. But yeah, you can see here's the expectation in price and time. We hit it early in price. Well, we hit it early in time. We hit the price earlier in time. And it might exceed the expectation at this point, because that is certainly a more bullish look. I mean, what kind of confuses me is why is this continuing to get stronger for the Canadian dollar when we explicitly saw the housing data for this come in not good? Like this is inflationary. I don't know, maybe it has something to do with, hey, you know, if this is the case, then we need more rate cuts. I'm not terribly certain what Canada's monetary policy is on interpreting housing starts, because this data takes a while, it's at least several months to work itself into inflation data, if not a year or so, depending on how long it actually takes to. I don't know what the average build time is for a house in Canada. Anyways, I am kind of surprised that this pair is continuing to strengthen. Also considering all the yield spreads are super positive, and in this pair, positive yield spreads is positive for the US dollar side. Red would be bearish for the other side, the Canadian. And to continue to see down moves and, well, the CAD continuing to get stronger is kind of counterintuitive here. So we'll just keep an eye on it. And then on the euro side, yep, negative expectations, still holding up from the move lower here. And it looks like, I'm not going to say we're topping out here, because New Zealand is an interesting case. It can continue going higher. This is something that has to be watched on a longer time horizon. But yeah, we can check out oil now. Oil is doing a nice recovery. Very, very nice recovery. I'm expecting a more sideways bullish action here. Most of the commentary I see on oil is expecting oil to effectively stay at $70. The range that I see is between 60 and 80. And that's pretty consensus. The outlooks are pretty well set on their consensus of a $60 to $80 range here on oil. So maybe it trades in the 70s, maybe it trades in the high 60s, you know. It's probably going to bounce around 70 for a good bit here, because lower oil will help maintain lower inflation, which will help the world recover with growth, which will actually increase demand for oil. And at that point, we have an oil oversupply at the moment, and a lot of production, oil production is currently offline, and a lot more oil production can be put online. So we kind of want the world to go back into a growth regime, so oil countries who want to sell more oil can actually put that production online. The oil companies and countries will be happy because they're going to be making more money selling more oil, and the rest of the world will be more happy because they're able to afford cheap energy, which will lead to more growth, ideally. Oh, yo. Hey, Harold. I walked past a guy at work today and couldn't help but notice him long CAD yen. Oh no, that doesn't seem like a smart idea. I mean, maybe he's doing okay. Right, that was probably the low for the month. Actually, these yield spreads are no longer terribly negative. I mean, they are actually still pretty bad. Looking at these spreads. It's only on the short term, the shortest of short term, that they look okay. I actually don't need that there. So, yeah, especially considering we know from the shunto in Japan that came out recently, we know that we're going to see higher inflation. The Bank of Japan is going to continue on their policy hiking, the 2 more rate hikes we're expecting this year. Also, outside of just the shunto, with wage inflation from the wage negotiations, the unions in Japan increasing their wages, I'm pretty sure the comments from Trump about China and Japan being currency manipulators, and you can throw the SNB in there for good measure too, right? The Swiss, is also keeping the Ministry of Finance kind of on the back foot, and like the rest of the government is looking at the BOJ and the Ministry of Finance saying, do not do anything that would make Trump or the US think that we're doing currency manipulation. So only do monetary policy for now. So the BOJ kind of has the green flag politically to continue hiking rates. So unless the yen gets like insanely weak, which doesn't seem likely from here given all the outlooks, I would not expect that the Japanese would even need to intervene in their currency market. Like something would have to go pretty bad. Something would have to go pretty bad for the yen to do crazy things like that. Pound yen though, wow, check that out. Again, the UK's been doing pretty all right here. Yeah, it's got some potential room, some headway to move higher. These are pretty neutral yield spreads. It's kind of dicey which way it can go. It's not definitively bullish or bearish, but you can see it's gone from being very red on the yield spreads to more positive. And we can check this out on shorter time frame. A little shorter of a time frame. Yeah, there we go. The reason why this indicator changes as you change time frames is the amount of historical data that gets loaded into the indicator changes based on the time frame that you use. And that's not a limitation of the indicator, it's a limitation of TradingView, because they limit how many historical bars you can load on your chart based on the time frame you're using. So if you use a daily chart, it'll load sometimes the entire chart history. But if you use a 6-hour chart, it might load a few years of chart history. And that's based on a limitation of how many bars they want to have available to you throughout history. It's like 20,000, 10,000, depends on your TradingView plan. Anyways, things are looking pretty all right for at least trading against the yen at the moment. But then again, this is also a pretty volatile pair, so do keep that in mind. Wow, that is a really fat positive yield spread there. I really would be surprised if that's not the low for the week. I would be really surprised. I think I did take a shot on the long side here. Yes. Let's go ahead and add in this long position. Let's go to a 2 hour, modify this. And what was the price? It was a few minutes ago. 1.43491. All right. It's in a little bit of a drawdown, but you can see taking the shot right there at the peak. Yeah, looking good. All right, now let's head back to that 6 hour. All right. Stop right around there. Trade the peaks, stops at troughs. Simple trading rule for the range probabilities indicator. And what else is there? Oh yeah, let's use some timing dots here. To help us set some slightly better expectations. So let's see here. If that is the top for the week, it seems like most of our lows are going to be like way down here. So this is going to be down, down, down and to the right. So I think we would be fine with using this spot here in range probabilities. This is rounded off to an even level here. 4, 3, 2. Nice descending number. There we go. So let's set that out. Actually, I'd be fine with getting out of all these USD CADs longs at that spot, because once we're down there, we're probably going down to here, but then at that point, this is still the top for the week, and I would be on the more cautious side of actually still going even lower. Like, you can see the odds. If this is the top for the current week, you can see that the odds of actually getting the low in here, given the current high, is actually kind of low. Most of the lows are actually much lower, which is more so in line with this probability spot right here, so of the distribution, that is. So I'd stay skewed. I mean, maybe it has something to do with what people are saying in Parliament, because again, Parliament is prorogued in Canada right now, which means they're not doing anything. And that's because Mark Carney was just elected as leader of the Liberal Party back here, right? Carney became leader of the Liberal Party. And it seems like him and a bunch of people around him are from the Trudeau administration, like 90. I think his entire cabinet is from the Trudeau administration that was the reason why Trudeau left is he was about to fail a vote of confidence and start an election. And at that point, Poilievre would have easily won. So Trudeau stepped down, put Parliament on prorogue. Carney won, and now Poilievre has to convince the other parties to vote Carney out, but it doesn't seem like there's enough support to do that quite yet. So we could see an election in April or May. If Carney does a particularly poor job and starts a trade war with the United States, which is frankly what I expect, based on who I see Carney hanging out with, very frankly somewhat anti-American Canadian politicians. And in getting into the trade war, it'll make Carney unpopular, and at that point, there'll be a vote of confidence based on the economic hit Canada takes trying to combat the United States. So we'll see how well that goes, that expectation. And if that expectation realizes, then yeah, we'll really see how well that goes. Again, Still kind of surprised that the Canadian dollar is strengthening here, because when you look across all the rest of these pairs, I mean, yeah, New Zealand's doing pretty good. We kind of expected it to continue higher. The Aussie, yeah, at this point, I'd expect it to go about another 20 pips higher. Yeah, all these are probably going to be higher. How about the euro? It seems like it's holding up. It's not doing too bad for itself, you know. Always gotta double check and like, well, man, am I just being a perma bear? Oh, is this? Yeah, this is from the test from the PineScript programming stream. That's not a real alert. We need to delete that alert. Let's see here. Edit alert. Delete. Yep. We don't need that alert. Oh, actually, I'm pretty sure that alert was us crossing this spot here. So now we're in this area. All right, let's actually slap on the timing dots here. Let's go one more higher. All right. So if this is the low for the week, right off the bat, we're gonna see some much higher prices. Most of the tops would be somewhere around here, so it's gonna more or less move something like that. Or even crazier, closer to the end of the week, right? So pretty crazy nutty moves here. I mean, either lower volatility moves higher here, or like a spike that continues higher here. And I'm not terribly certain what would cause that. You know, maybe a particularly dovish FOMC. But it seems like the FOMC is going to remain on hold. And their expectations are effectively going to remain the same. I believe the main thing that people are looking at for the upcoming FOMC meeting on Wednesday is if the FOMC's projections, right? Their forecasts for the rest of the year. If they show 2, 3, or 4 rate cuts. I'm pretty sure we're going to have pretty high variability in the dot plots, frankly. Some people, you know, we'll have a couple of guys who are expecting 4. I think most people at the Fed are going to be expecting 2 rate cuts. Just 2. It's really going to depend on growth and inflation, and it's better for the Fed to stay on the more hawkish side to temper inflation expectations than, and if you remember the inflation expectations from that came out last week, inflation expectations came out higher. So the Fed needs to set a more dovish tone at this next meeting in order to adjust those expectations, those inflation expectations, and to make sure that they stay low. So I think the Fed will have a more hawkish tone going into this next meeting in order to try and impact the next inflation survey. Other than that, I'd say that I'd want to stay long the US dollar going into FOMC given that information, especially from that really, I think it was like one of the biggest surprises and one of the biggest inflation expectation prints like almost ever. It was an insano inflation expectation print. So if the Fed kind of pussyfoots around and says, oh, we'll do 3 rate cuts, I don't think it'll help them achieve their goal of tampering down those inflation expectations enough. Like they really have to move in on just saying, we expect there to be 2 cuts this year, because the market's still expecting 3, and a decent number of participants are still expecting 4. So if the Fed says 2, that'll change expectations in markets, and that'll move the guys who are still expecting 4 rate cuts this year back down to, down to 3. It'll move some of the guys who are expecting 3 25 basis point rate cuts down to 2. And that goes back to it. Trading is about getting exposure to a change in expectations. So if I expect the Fed to be hawkish, and then for all these rate cut expectations to get brought down, I would rather be long the US dollar in that scenario. So all these long dollar trades that I got going, that's why I'm not terribly like freaking out, like, oh my god, USD CAD, it's moving lower, I'm quaking in my boots, oh no. It's like, yeah, I've set an expectation on where to get out, and who knows, I might be even getting out too soon, depending on how things develop over the rest of the day here. Because the thing can always wick down and then come back up, and that would suck, right? Right? Like, those exact sort of things have frankly happened to a lot of traders. And it's happened to me, but it's happened to pretty much anyone who does discretionary trading. So, let's not kid ourselves here. My main thing is just on, okay, yeah. Fed stays bullish, and at least on the USD CAD side of things, we also see more combative Canadian politicians on the tariff side of negotiations that end up with a much weaker expectation for Canadian growth. You go ahead and you slap on a more hawkish Fed, and didn't mean to move that. You can end up with, you could be trading, what is it, way up here? What's that? 133.4, call it, like this spot. Just gonna highlight it, right? So kind of make your way up after FOMC. But that's under the assumption that this is the low for the week, somewhere in this green box right here. And we can hide those low dots, maybe reduce this a bit by like a 0.5%. Yeah, you can see most of the dots are still here at the end of the week, or like all the way up here. And this would be, an extremely hawkish Fed. I'm not expecting that. This would be a hawkish Fed plus Carney doesn't know how to talk to Trump. And we get a Trump-Carney call sometime this week. Or Trump just reiterates again, hey, I'm not happy with how Canada's currently doing their negotiations or trading the United, just Trump says something that's negative for sentiment on the US CAD negotiations. Now, on the flip side, I've been hammering the negative side of that. Carney and Trump could potentially get along. But considering this week we also have FOMC, it'll at least give me a spot to exit, right? So I'm expecting the hawkish FOMC to come here. Maybe Carney comes in later, shakes hands, is buddy-buddy with Trump, or is able to get at least some kind of preliminary deal going on. And at that point, I can at least get out of these. But even then, I might not really even still want to get out of these trades, because come April 2nd, right, after this trading week, over here in this trading week, so call it 3 weeks out from right now, we have all the retaliatory tariffs going on, which could make the US dollar really strong because that'll impact Europe and that will impact pretty much every country. So, it's kind of hard for me to have a short-term view of how to trade things, considering a lot of how things are moving right now is dependent on things that are yet to happen in a few weeks still. Yeah, it's been a volatile trading session, or pretty much ever since Trump got elected for these past couple of months. Man, it's like if you are not in the Discord and you're not following this Trump Watch thread, I mean, this is the most popular thread in the Discord server. And if you need to know how to get in here, you just go here to the WAP, links in the description, in the pinned comments here. You just go to the link in the pinned comment and go to Plan the Profit Community, hit join. This will take you to the server and you'll actually get asked here in channels and roles. Optional, get pings of Trump Truth social posts in the Trump Watch research thread. And whenever there is a new post from Trump, you'll get pinged here. It's very, I learned this after trying to trade the first Trump administration. And that was relatively more stable than this. Like, you gotta watch what Trump is doing. Because Trump is moving a lot, the way a lot of assets move. Trump is changing how a lot of assets move. Because so many assets have exposure to tariffs. Let's get a sip of water here. Ooh, Canadian home sales fall 9.8%. Wow, that's pretty bad. So not only are the Canadians not building as many homes, but home sales also fall. I wonder if that has anything to do with migration in Canada, right? We'll see. UK's Chancellor Reeves need to get a grip of government borrowing and government debt. Yeah, no duh, Reeves, no duh. We aim to turn around the UK's lackluster growth. I mean, I roll my eyes when I read that because the way the UK needs another Margaret Thatcher to deregulate the economy. Because the thing that's killing the UK right now is a lot of regulations. And also just blatantly racist policies against people who are native to the UK, frankly, or people who are UK citizens. I mean, I don't want to go too much into the politics, but the UK has a very similar issue with GDP growth as the Australians do, where a lot of the low productivity that comes to hurt GDP growth comes from just letting anybody and everybody as immigrants come into the country. Like, there's no selection, and worse off, there's no security check. So in order for the UK to really fix their growth, and same thing with Australia, they need to have deregulation, and they need to have immigration control, immigration policing. Like, simply put. I mean, the same thing is what the AFD doubled in size for, right? It went from 10% to 20% in the Bundestag in Germany. And that was just on saying, hey, we need to take care of these problems here. I mean, I'm kind of surprised that the AFD didn't win more, because there were multiple murders and horrible things that happened every single week, sometimes multiple times per week, that hit the news going into the German federal election. It's kind of crazy. Yeah. And, you know, the same thing happens in the UK, right? So, I mean, it's a very hot topic. It's a very popular topic. But, you know, this is a trading channel. However, we do have to keep our eye on those things, because those can lead to new political parties, new fiscal policy, depending on how severe it is, new monetary policy. So if you don't, you know, if you just say to yourself, oh, that's politics, I'm not going to look at it because this is a trading channel or whatnot, that's really stupid, because geopolitics can directly impact fiscal policy, can directly impact monetary policy, can directly impact sentiment. So if you're not paying attention to those things, you are intentionally ignoring useful information to set your trading expectations with. So I'm looking at it from like a utilitarian point of view, right? Of why you have to know what's going on politically. And, you know, wet your finger, put it up into the air and figure out which way the political winds are blowing. Because it's like the same thing with green parties in all these different countries, environmentalist parties, you know, eco-Marxist parties. You have to be aware of how popular they are, how much power they have, because, I mean, look at what the Greens in Germany just did. They just got a bunch of, they got like $50 billion negotiated, like half of, or $100 billion. They got a huge portion of the new stimulus that Germany is voting on tomorrow allocated for their agenda, like as a bribe for their votes to actually get the stimulus passed. Yeah. There's a new one I just learned today. What is it? There's a 3 to 5K cladding tax on all new houses. This is in addition to the jump in stamp duty, with an additional, oh my god, £5,000 plus per house, happening end of the month. Oh yeah, that's right. There's the, if we go to British pound dollar, yeah, spring statement, the spring statement, which is effectively going to say, oh yeah, remember all those taxes we promised that we weren't going to put on back in the what is it, the autumn, in the autumn budget? Yeah, all those things that we said weren't going to happen in the autumn budget turned out to not be enough, and so we're going to have to go back on our word and re-implement all those things. And, you know, thank you for your votes, stupid. Thank you for your votes. Thank you for putting us into power. But now we have to literally do the opposite of what you voted for us to do, because the UK literally doesn't have enough growth going on in its economy to sustain the amount of debt that we want to put on. More austerity for the UK. Yeah. The government here said they wanted to boost house building or home building, but in one fell swoop they have made swaths of the country unbuildable. Yeah, a lot of regulation. We need an early election. Yeah, there's gonna very likely be one, I think. I mean, Starmer is so wildly unpopular, and it will definitely happen, especially if Farage gets kicked out. For those of you not in the know, here in the research forum, we follow a lot of elections and political events. We're still following the Canadian federal election. The German debt break stuff, we're following that. That's going to be coming to an end here shortly. Mexican drug war, Israel Gaza, Trump tariffs, Australian federal election, Panama Canal retake, like a lot of really interesting subjects, right? Remember what I said? You gotta know what's going on, because, I mean, you understand the economic implications if the US takes full control of the Panama Canal, no? It means way less prices for US ships going through. Like, it'll be really, really, really low price for US ships to go through. And that'll decrease the inflation rate for some of the ships going through to the US. Israel, Hezbollah, cyclones. Oh yeah, this one, half of the Senate in Japan is going to be up for election, right? Japanese House of Councilors. Kind of a big deal. USMCA, right? There's a bunch of updates coming along here. I mean, we'll see how that develops. Where is... Yeah, UK general election. In relation to your question here, Harold. Oh yeah, there's a post from me. Oh yeah, reform staffers resigning en masse. Yeah, so we were saying, you know, yeah, Nigel Farage is getting ratioed on X for lying about this guy low. And if you don't know what's going on, guess what? There's a whole video here from Sargon that you can watch from a few days ago. And you can get totally caught up with exactly what's going on politically in the UK, right? You have guys who are actively looking at the research here, actively getting involved, giving their opinions. Don't get me wrong, they will be biased, and that is okay. It's just a matter of acknowledging, okay, I have this opinion, but I also need to collect information on what other people's opinions are, right? What is the opposition thinking? What are the people in favor of this are thinking? You need to have as full of a picture of what's going on culturally as you can. And generally speaking, the more you learn about the world, the better at trading you get, the better at life you get. So let's stick to that. And it looks like we're still seeing some dollar weakness here. Oh no, whatever will I do? Oh no. But man, look at that, New Zealand. Go, 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 New Zealand. Yeah, imagine if I had held on to this thing. Yeesh. It'd be up 100 pips. I think this was this was an end of day trade here. Yeah, that was just an end of day trade. We go here. We can hide these dots. Select the bar. Then we have to set it back one more than that. Yep. So that's the deal here. We had a peak in the distribution here, and that's the trade. And then this was the expectation to go. Nice and simple and straightforward. But I did not have such positive expectations going forward for New Zealand. That's why I did not hold that trade. The fact it recovered like this has been quite a surprise to me. In fact, when I look at most of the outlooks written by some of the economists at a lot of the largest banks that cover New Zealand, they are kind of just as surprised as I am. Like, oh, there's been I don't know what positive news has come out, frankly, to warrant this. It could just be US dollar growth expectations being weak currently that's driving this. And then, once the FOMC comes around, it puts the kibosh on that. But we'll see. In the meantime, from what I understand, a lot of the farmers in New Zealand want this to stay low, and in fact to go as low as possible, so that then they can continue to export as much as possible. In fact, I read something interesting. The United States, I think, is like the number 2 or number 1 now importer of New Zealand beef. So meat product that comes out of New Zealand, a lot of it now goes to the United States. The United States is importing a lot of stuff from New Zealand right now as far as meat goes. That's because I'm reading commodity outlooks from New Zealand banks. Yep. Yeah, we need an early election. Yep, that's right. Okay. I think we've had a nice, healthy bit of analysis here on a bunch of different assets. I'll go ahead and check out the streams real quick. We've had some pretty good viewership this whole time, I'd say. Yeah, a couple of guys watching on Kick and Twitch, and of course the fam over on WAP hanging out. Always appreciate the guys on WAP. And then everyone who's on YouTube. Again, most people are watching over here on YouTube. So always thank you guys for watching, especially. And for showing up every day in the chat and saying hi and giving me questions, some food for thought for myself to go down another rabbit hole and do another good rant with. Always appreciate it. So, with that all said and done, I'll go ahead and call it here. I'm gonna get to work on some indicators. I didn't get very much sleep last night, but I'm gonna take a quick little nap and get some food and finish programming and stop my trading view from lagging like at the beginning of the stream. Alrighty, you guys. Thank you very, very much for watching. And I'll see you guys at tomorrow's stream, which is actually going to be at around the same time, same starting time. We'll have the BOJ rate decision and Canadian CPI. So, if you're down to stick around and you've been watching this far, definitely like and subscribe. I'll see you all in a bit.